Hi there, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. And over the next 1 hour, we'll take you through all the global and domestic cues that you must watch out for and also tell you about the stocks that you need to keep on your radar today. So let's get started with an eye on the globe. And markets are heading into the final trading day of 2025. And it is on a cautious note as far as Wall Street is concerned. If you talk about US futures, they were mixed this morning. Now remember, this comes after a third straight losing session. Overnight, the S&P 500 fell about 0.1%, whereas the Nasdaq slipped about 0.2%, and the Dow lost nearly 95 points. Well, the timing is notable as this period is usually associated with the Santa Claus rally, which is a seasonally strong stretch for stocks. But recent profit-taking, that may be signaling that some near-term volatility is due. While strategists still expect the S&P 500 to post a double-digit gain in 2026, many have warned that the markets could stay range-bound for some time as earnings catch up with high valuations. Now, if we talk about some key themes this year, AI has remained the dominant market driver, with the S&P 500 up more than 17% so far in 2025 and sitting near record high levels. But the rally broadened this year, with Alphabet standing out among the mega caps and commodities delivering strong gains, led by gold and silver. Other indices, Nasdaq Composite went up about 21% this year, and Dow Jones also logged gains of 14%. If you talk about the monthly basis, that is in December, that is also shaping up to be very positive. The Dow is up nearly 1.5%, the S&P has gained about 0.7%, and the Nasdaq, that's higher by about 0.2%, putting all of the three indexes on track for another strong close to the year. Well, as markets head into the final session of this year, the street will be watching for thin liquidity, last-minute positioning and clues on whether momentum that can carry into the opening weeks of 2026. So yes, that's about Wall Street, Srishti. But how are things on the crude front? It's been a very interesting year for crude and commodities.
Indeed, Kanishka, and especially commodities like towards the flag, and we have been talking about the drying up of volumes in the equity markets, which seems like all the action is actually in the commodity world. But let's start with the crude prices, because just yesterday overnight we have seen almost a 2% surge coming in on Brent crude, with rest of the commodity basket as well. But as of now, it's seen to be cooling off a bit. The geopolitical risk did offset the demand concerns, but it's Russia that is claiming more strikes by Ukraine. So the commentary with respect to Russia and Ukraine is something that has been making into the headlines, and along with that, it's Zelensky as well inviting President Trump into Ukraine. Along with that, it's renewed tensions in the West Asia that keeps the prices volatile. But Kanishka, along with that, what we get to see is that gold is seen to be retracing a bit. Silver, which was up almost 7 to 8% overnight, is down 5%, and even quite interesting moves in Dr. Copper as well, Kanishka.
Absolutely, very interesting moves. It was not just precious metals like gold and silver, which were the highlight of 2025. But copper, that's heading for its best year since 2009, powered by AI-led demand and mounting supply fears also. Now, the 3-month copper on London Metal Exchange, that is LME, hit a fresh record high this week, with prices up over 40% this year. Analysts are saying that this rally is being driven by a tight supply, a weaker dollar, and improving China growth expectations. That's the key here. And also explosive spending on data centers. So yes, that's the reason why copper is up nearly 40% this year.
All right, and so is silver, because silver is staging a sharp rebound after one of its wildest sessions in years, and after hitting a record of $82 an ounce just recently and then logging its worst single-day fall in 4 years. Silver futures did jump 7% overnight on Tuesday, underscoring the extreme volatility at the year end. But yes, as of now, silver is down more than 5% as we speak, but the metal is now up over 150% year to date, buoyed by the industrial demand from solar, EVs and data centers, alongside the geopolitical risk and a weaker dollar as well.
All right, so that's about some of the commodities, but time now to get you some top global updates that we're tracking this morning. And the minutes from the US Federal Reserve December meeting revealed that a sharply divided central bank is what we had seen last month, this month for that matter. Now, while the FOMC voted 9-3 to cut the rates by 25 basis points, Several members said that the decision was finely balanced. Most officials, they've agreed that further cuts could be warranted if inflation continues to ease, but others have argued for holding rates steady for some more time. Now, the minutes show that there's growing unease over cutting too fast, with inflation risk still on the upside and labor market risk on the downside.
All right, let's shift focus to China then, because China has unveiled nearly $9 billion in the first tranche of 2026, where consumer subsidies stepping up the efforts to revive the domestic demand, and the funding will be raised via ultra-long special sovereign bonds, according to the National Development and Reform Commission. Now, subsidies will cover electric vehicle tradings and extend to the electronics like smartphones, tablets, and wearables as well.
All right, moving on to the semiconductor space now. China has quietly mandated that chip makers use at least 50% domestically made equipment when adding new manufacturing capacity. Well, the rule, not publicly announced, is now being enforced through state approval and procurement processes for new or expanded fabs. That's according to several reports that we have been getting. Now, the move marks one of Beijing's strongest pushes yet towards semiconductor self-sufficiency.
All right, in Japan, SoftBank has fully funded its massive investment in OpenAI, sending the final tranche last week. Now, the total commitment stands at about $41 billion, valuing OpenAI at $260 billion pre-money valuation and giving SoftBank roughly 11% stake. Now, the funding supports OpenAI's rapid AI expansion, including data centers and the strategy infrastructure push with partners like Oracle.
All right, moving on to the latest coming on the war front. Now, Russia says that Ukraine launched a fresh wave of drone attacks targeting Moscow, Western Russia, and annexed Crimea as well. Now, Russian air defenses claim to have shot down 27 drones in 3 hours, including several over the Moscow region, with one civilian reportedly injured. Now, the strike comes a day after Russia accused Kyiv of attempting to target President Vladimir Putin's residence, which is a claim that Ukraine has dismissed as baseless.
And moving to another story then, and a Saudi-led airstrike on Yemen's southern port of Mukalla has laid bare the deep distrust between Saudi Arabia and United Arab Emirates. Now, the strike followed a surprise advance by UAE-backed separatist forces near the Saudi border, promoting Riyadh to declare its national security a red line. Abu Dhabi, caught off guard by the strike, announced the withdrawal of its remaining forces from Yemen.
All right, so those are the top global stories that we are tracking this morning. But now let's shift focus back home to the national capital. Now, we all know that air pollution affects our lungs. We also know that foul air has an adverse impact on our pockets. However, Delhi's deteriorating air and alarming levels of air pollution, they're also taking a toll on the capital's business prowess. Yes, you heard that right. Now, Delhi's lethal air pollution has already led a pharmaceutical company's finance head quitting immediately. Looks like toxic air is much more difficult to handle than toxic bosses here. On a serious note, Delhi may now be losing out on business opportunities and investments due to its dangerous levels of air pollution in the capital. Yes, viewers, and it's not just the adverse impact of air pollution on the economy that isn't well known. Now, a World Bank report that was released in March 2025, it estimates that nearly 5% of global GDP is lost annually due to air pollution through reduced labor productivity, lost working days, and shorter life expectancy. Now, all of these factors which greatly contribute to the loss of productivity and quality of work and life. Well, the message is loud and clear that Delhi's air pollution has a high economic cost. But before we get you more, let's first listen in to what former IMF chief economist Geeta Gopinath had to say on the price that India is paying for its highly polluted air.
So if you look at the impact of what that is doing to the Indian economy in terms of the effect on health. So this is, a very nice study that was done that looked for a particular year, it was 2019, looked at the effect of air pollution only, air pollution on premature deaths in India. That number is 1.67 million deaths. That's 18%. 18% of the deaths that happened in 2019 were attributable to air pollution. That is every year. And it's gotten worse since 2019. To put that in perspective, the tariffs that India is facing from the US, the effect on the Indian economy is about 1/4 of that, right? And it's going to go away. It's going to go away in a couple of years. But this is not going away.
The highly educated, the erudite, the elite, and the extremely rich people will be able to make this choice. I think as time goes by, we see those choices. I am hopeful that younger people will make this both a political as well as a societal choice. Just as probably the Gen Z is drinking much less and smoking much less than the millennials, as you said, and millennials are probably okay with a lot of personal choices as well. I hope that what they put in their body through the ambient air and ambient water is also something that they're able to negotiate out. I'm sure it's already a useful sort of bells and whistle that certain organizations sort of perpetuate. So there's a few universities in India, in Dehradun, in Nainital, in Shimla, which are already branding themselves as having the cleanest air campus. So it will become a feature, but how does it become a feature for everyone and not just a few is the question that we must think about.
Cost of inaction in terms of not doing enough is higher than cost of action. In fact, when you say the GDP, the loss of GDP, if you look at the World Bank report or the Lancet report for that matter, that ranges from 3% of India's GDP to almost some studies are talking about 6 to 8% in that sense. Imagine the amount of money that we're actually losing to mortality and morbidity because of inaction on the part of our governance. And therefore, we will have to really look at it from a systemic point of view. We have to look at it from the lens of equity and justice. It is not a choice that one can exercise. And also, this is not a question of health. So when we say Gen Zs are more health conscious, this is not just about your ability to perhaps run or work out more. This is about your ability to really breathe and live, because that data that you actually presented and that is known to everyone in the government, although not to our ministers so much, that almost 1.5 million people die because of air pollution. Of course, the unfortunate part is that India's parliament and the environment minister of India actually says that no one falls ill in India or no one dies in India because of air pollution. So
all right, but for this, viewers, it's now time to slip into a very short break in this edition of Market Cafe. Don't go anywhere. As we come right back, we're going to be telling you all the stocks that you should be watching out for in today's trading session.
Now to take a look at how the Asia Pacific markets have opened up, and it looks like really a holiday mode on the Asia Pacific front because most of the markets, they've fallen on the holiday shortened week and the final trading day of the year. Now remember, markets in Hong Kong and Australia, they'll close early today for holidays. First up, let's see how they're faring. Now, Hong Kong's Hang Seng Index, that's down about 0.5%, 25,700. That's where it's trading, of course, with thin volumes. Australia's ASX 100 too, it's absolutely flat, but in the shade of red right now, 8,716. That's where ASX 200 is. But if you talk about Japan and South Korea, those markets are shut for the day. China's Shanghai, that's also trading absolutely flat, but with a negative bias right now. 3,962, that's the level that it's managing to hold on to. So yes, a slightly negative day of trend coming in for the Asia Pacific markets. But if we talk about Nifty, yesterday we did, we couldn't end above that 26,000 mark yet again, 25,950. In fact, we gave up that level also. So yes, it was a slightly negative day that we saw yesterday as well. But if we talk about the opening that we are expecting for today, well, it's likely going to be a flattish start for the Indian market. That's what the GIFT Nifty is suggesting. However, for now, looks like it might start in the green. But yes, it is going to be a likely, very muted start, Srishti. That's what it looks like. So yes, a muted start is what we are expecting, but with a slightly positive bias today.
Indeed, all eyes on that, but I do feel a bit jealous about that, Kanishka, that most of the Asian markets
are closed.
Exactly, but just can't help it.
Yes, absolutely.
But with this, viewers, let's get back to the markets then, and let's now tell you which are the stocks that you should be watching out for in today's trading session, which are some of the counters that will be in focus on the back of the news flow. Firstly, let me take it across to Ishika, who's standing by with a list of stocks. Ishika, morning.
Definitely. So here are some of the stocks that are in spotlight today. We have steel stocks such as Tata Steel, JSW Steel as well as JSPL. And the government has imposed a safeguard duty on imports of certain steel products. products. This safeguard duty will be imposed in a staggered manner for 3 years. For example, it will be imposed at 12% in the first year, 11.5% in the second year, and 11% in the third year. Now, this will be applicable to imports from China, Vietnam, as well as Nepal. Next up, we have rights. It is in news on a positive note. It has received an order worth $3.6 million or 32.4 crores from Zimbabwe's Berhad Development, right? Now, this adds to the export presence and international presence, though the order is not of a significant amount. Now, we also have Bharat Forge in news on a positive note. It has signed its largest small arms contract with the Ministry of Defense for supply of indigenously designed as well as developed CQB carbines worth 1,661 crores, right? This is critical for its defense portfolio and diversification as well. And for some context, its H1 FY26 defense portfolio stood at roughly 6,500 crores, a little more than that. We also have Orient Tech in news today. Now, it jumped a 20% upper circuit in trade yesterday on its announcement of 1:10 bonus issue. So for every 10 shares of the shareholders, they will receive one extra share. Now, the record date for bonus is set at 5th Jan 2026. We also have Eternal as well as Swiggy in news on a negative note now. The delivery workers have called for an all-India strike today. So yes, you should definitely track that, and back to you.
All right, thanks, Ashika, for all of those updates. Many stocks to track today, but let's shift focus and also talk about some of the other stocks. Another list of counters that are going to be in focus today. Well, many of them are going to be added to the F&O segment, the likes of Swiggy, Bajaj Holdings, Wari Energies, Premier Energies. All of these counters are going to be added to the F&O segment today. So let's wait how the stocks react to this latest development. Next up, telecom stocks. They are going to be in focus. Why? Because TRAI, the Telecom Regulatory Authority of India, that has made suggestions to regulate the sale of foreign SIMs and eSIM cards for all of these counters. So yes, Airtel, Vodafone, all of these counters are going to be in focus today. Meanwhile, the lock-in period is opening for Kalpataru projects and Acme Fintrade. So yes, these two are also going to be in the spotlight today. So watch out for them. Next up, another stock in focus is going to be NACL Industries. Now, why? Because the company's board is expected to mull fundraising today via a rights issue. So let's watch out for that as well. And lastly, we have Torrent Pharma. It's going to have its board meeting on January 5th. That's the latest they have announcement that they have made. Now, this is to consider issuing NCDs on a private placement basis. So yes, watch out for this one as well. So lots of cues to watch out for, Srishti.
All right, let's have an eye on that. But with this, let me take it across to Snehi, who is standing by with more list of factors that you should be watching out for. Snehi.
Well, yes, lots of cues to watch out for. It's the last trading session of the calendar year 2025. 31st December is here, and here's a list of all the cues to watch out for. First up, keep a very close eye on 4 particular stocks. That's Swiggy, Bajaj Holdings, Wari Energies and Premier Energies, because all 4 of these stocks are going to be included in the F&O index starting December 31. So watch out for that. Globally, US, you will have jobless claims numbers coming out. China, manufacturing as well as non-manufacturing PMI numbers, and Japan is going to be starting their New Year celebrations early. It seems the markets are going to be closed on 31st December. In terms of corporate action and board meetings, NACL Industries will be mulling fundraising via rights issue of shares. So watch out for that. Also, watch out for Eternal and Swiggy, because from what we hear, the delivery drivers and the gig workers are planning to call for an all-India strike, a similar to the one that they did on December 25. This is once again being called for on December 31. So we'll just wait and watch and see what the impact, if at all, on some of these stocks is. Earlier, we had the intimation from Segachi Industries that they were going to be mulling fundraising on the 31st, which they have recently come up with an announcement and said that they are not going to be doing so. That board meeting stands cancelled. So watch out for that as well. And Jindal Poly Films, the Q2 earnings for this company will be out too. In terms of lock-in period ending, Kalpataru Limited, 54% stake equity will be coming out of lock-in, and for Acme Fintrade, 20% equity will be coming out of lock-in. And lastly, in terms of some other events, some important deadlines to watch out for, since it's the last day of the year. It's going to be the last day to claim your income tax refund if you haven't done so, and also the last day to link your PAN and Aadhaar card together if you haven't done so already. Globally, well, it's going to be a bidding goodbye to a legend who's going to be hanging up his boots after 6 decades at Berkshire Hathaway, and that's none other than Warren Buffett, who's going to be retiring and stepping out after 6 decades, and Greg Abel is going to be taking over the reins from the 1st of January. So yes, these are going to be some important market triggers as well as important cues to watch out for.
All right, thank you, Snehi, for all of those updates. Lots of cues to watch out for. But with that, time now for a very quick break. We'll be right. It's time now to talk about the telecom sector. Now, the Telecom Regulatory Authority of India, or TRAI, they've released a recommendation on a regulatory framework for the sale of foreign telecom service providers' SIM and eSIM cards that are used in machine-to-machine and Internet of Things devices meant exclusively for export. Charu is here to take us through all of the details. Let's take a look.
So the Telecom Regulatory Authority of India, that is TRAI, has just come out with recommendations regarding this. What they are saying is that the export-bound devices, that means the devices that will be sent out after being developed in India, now they can have some sort of an authorization or a policy help, which would be very light touch. That means, it would be very encouraging and will not trample on their manufacturing or designing capacities, because it will be very light touch. Now they'll have some sort of an authorization framework to use the foreign SIM cards and eSIM cards in the devices that they'll develop to send these devices outside. Now this is only for the M2M devices, that is machine to machine, and IoT, that is Internet of Things. Now what this is going to essentially help in is giving them some sort of an authorization and framework to use this within India and sort of test their products properly.
Right, thank you so much, Charu, for getting us all those details. But moving on to another story, and exclusive sources tell ET Now that listing of state power distribution companies are set to gain momentum as the Ministry of Power pushes next-generation power sector reforms. My colleague Prakash Priyadarshi joins in with more details. Prakash.
Well, we're learning that the listing of state power distribution companies is likely to gather momentum next year. In fact, the Power Ministry has asked them to speed up process for DISCOM's listing on the next-generation power sector reforms. A very significant development coming in. We're given to understand that the Power Ministry has sought details on the progress made so far on listing of DISCOMs. In fact, it has urged states to list at least one DISCOM in a time-bound manner. Sources indicate that at least 5 states are gearing up for listing of their DISCOMs by financial year 2027. States like Andhra Pradesh, Gujarat, Chhattisgarh, Haryana, Maharashtra have already started the process. In fact, Andhra Pradesh and Gujarat have finalized merchant bankers for IPOs. States like Haryana and Chhattisgarh likely to file DRHP soon. In fact, the government wants DISCOMs to be listed on exchanges to ensure better governance and stable capital flow. However, the Power Ministry is not in favor of bailout for loss-making DISCOMs.
All right, so that's about the power sector. But now all eyes are going to be on the budget 2026. And Prime Minister Narendra Modi chaired a meeting with economists at Niti Aayog yesterday. The Finance Minister Nirmala Sitharaman, Niti Aayog Vice Chairman Suman Berry, they were all in attendance. Prakash is back with us to take us through the details.
Well, the Prime Minister has held a meeting with economists and sectoral experts ahead of the Union Budget 2026-27. This meeting was very crucial as the Union Budget will be presented amid global uncertainties, and therefore the Prime Minister sought economists' views for next year's budget. As per the statement shared by the government, the theme of the interaction was Atmanirbharta and structural transformation for Viksit Bharat. In fact, economists shared their insights to the Prime Minister on enhancing productivity and competitiveness across the manufacturing and services sectors. Discussions were also focused on accelerating structural transformation through robust infrastructure development. Along with that, issues such as adoption of cutting-edge technology, use of artificial intelligence in governance were also part of the discussion. Along with that, the statement also mentioned that the economists noted that the reforms measures taken by the government in 2025, especially next generation reforms, will pave the way for faster growth. In fact, that will help Indian economy to remain one of the fastest growing major economies in the world in 2026. Along with that, the Prime Minister also calls for mission mode reforms across diverse sectors to sustain long-term growth, and given clear hint that the government will continue next generation reforms in the year 2026 as well.
All right, thank you so much, Prakash, for all those details. But hang on, because as we understand that the Ministry of Defence yesterday signed contracts worth a total cost of 4,666 crores for the procurement of close quarter battle or CQB carbine and heavyweight torpedoes. Now, the contracts were inked in the presence of Defence Secretary Rajesh Kumar Singh at South Block, New Delhi. Prakash joins in with more details.
Well, Defence Ministry has signed rupees 4,660 crore contracts for the procurement of close quarter battle carbine and heavyweight torpedoes to improve capabilities of Indian Army and Indian Navy. In fact, contracts were signed for over 4.25 lakh SQB carbine along with accessories worth rupees 2,770 crores. As per the statement shared by Ministry of Defence, contract was signed with Bharat Forge Limited and PLR Systems Private Limited. Along with that, in a separate contract, the procurement and integration for 48 heavyweight torpedoes will be made for Indian Navy, and that will improve their capabilities going forward under current warfare. Submarine Systems SRL Italy will supply heavyweight torpedoes with cost of rupees 1,896 crores. In fact, the government has also mentioned that the Ministry of Defence has signed capital contract amounting to rupees 1,82,492 crores for the modernization of the Indian Armed Forces so far in financial year 2026.
All right, so that's about the defense space. Continues to be in buzz, but moving on, let's also talk about the aviation sector. Now, in a significant milestone, the Air India Express has received its 51st Boeing 737-8 MAX aircraft. Now, remember, this marks the airline's first line-fit aircraft custom-built from the factory specifically for Air India Express. The aircraft registered VTRNT, a special feature in tribute to late Ratan Naval Tata, the chairman emeritus of the Tata Group, honouring what would have been his 88th birthday. Now, this line-fit aircraft comes with built-in upgrades like ergonomic seating, tech-friendly, also hot meals, and now Air India Express now operates a total fleet of over 100 planes is the latest that we are picking up.
All right, so that's about Air India Express. But moving on to another story, and India could see strict set of rules for energy labelling on appliances starting January 1st. Samir is here with the details of how the government aims to enforce the new regulations. Let's go across and listen in.
An important news for the electrical appliance industry or for the consumer durable industry. The central government is all set to introduce more stringent and accurate norm for the energy labeling. BEE, the Bureau of Energy Efficiency, has already notified these norms that will come into place from 1st of January 2026. So what it is going to change? From 1st of January, all the appliances will have a clear visibility of what sort of energy efficiency it is carrying. For example, it is a 3-star rated, 4-star rated or 5-star rated product that has to be clearly showcased. In addition to this, there has to be mandatory QR code on the appliance. Now, with the help of this QR code, a customer can easily scan the QR code and get all the necessary information or the details of the appliance, whether it be related to the manufacturing of the product, or the country of origin, the import country, or even the process of the making as well. So all the necessary information along with the energy efficiency of the product can be scanned easily through the QR code. Also, name and shame policy is going to be introduced. So what BEE is looking that randomly they will be collecting any sample from the market, they will test it, and if the product fails on the parameter, then on a national newspaper, the company name as well as the product will be properly informed to the customer that these products have failed, and shame policy will be adopted by the central government agency. Also, these rules will be applicable for the online or the e-commerce entities as well. critical. They have to properly showcase about the energy labeling, about the energy efficiency norms of the product, so that the customers can make an informed choice of the product. Also, the government also has categorized in these particular norms into two categories, a mandatory and a voluntary. So this energy labeling norms will be mandatory for the appliances such as fridge, washing machine, ACs. These all products will be mandatory, whereas for appliances like laptop, printer, computer, the energy labeling norms are going to be voluntary. So based on this, the government has introduced these norms, and government understands that this will help to bring more transparency and accuracy when it comes to the energy labeling and efficiency of an appliance.
All right, thanks, Amir, for that update. But let's move on and also talk about the insurance space. Now, India's general insurance industry is all set to appoint a chief executive health at the General Insurance Council in a decisive push to curb health insurance fraud and streamline hospital-insurer relationships also. Anurag Shah is here to take us through the exclusive details of the story.
Industry body of general insurance companies, that is GI Council, is all set to appoint Chief Executive Health at GI Council, and this appointment mainly is in focus for to drive the common empanelment process, which is a single agreement between hospital and all insurance companies, and to crack down hard on the fraudulent claims, because presently insurance industry is suffering from fraudulent claims, and there is an estimate of around 3,000 to 5,000 crores of fraudulent claims, claim outgo is happening every year, and which is impacting insurance industry. So keeping all this in view, GI Council is going to appoint a Chief Executive Health at the industry body. The focus will be on the common empanelment process and to curb the fraudulent claims. And in last year, we have also seen that relationship, the friction between hospitals and insurance companies also. So to make that process also smoothen, in keeping in these objective, industry body is going to appoint a new chief executive health at the GI Council level. So going ahead, industry is hopeful that if they are able to curb the fraudulent claims, so it will be beneficial for the policy holders also, because health insurance premium increases due to the fraudulent claims. So going ahead, a lot of action we'll see in health insurance space.
All right, thank you so much, Anurag, for getting us all those details. But moving on to another story, and India's startup ecosystem stayed resilient in 2025, with tech firms raising $10.5 billion, ranking the country third globally after the US and UK. Now, early stage funding rose 7%, IPO exits rebounded sharply, and the acquisitions dominated VC exit. Let me take it across to Ishika, who joins in with the roundup. Ishika.
Definitely. So this year, 2025, has been quite robust in terms of startup ecosystem. Now, let's talk about some of the key highlights here. Mumbai and Bengaluru led in terms of most startup funding spaces. And in H2, we had more than 16 IPOs from startups. And in terms of early stage funding, we had $3.9 billion coming in, up 7% year on year. And in terms of unicorns, we created 5 unicorns this year, same as 2024 that listed. Now, another highlights include that in tech space, the Indian tech startups have raised more than $10.5 billion in 2025, placing India after United States as well as UK, as you can see here. After us, we have China and Germany in the tech startup space. And in terms of investor activity, now it has narrowed down, yes, with fewer first-time investors, but more established VC funding as well, and PE firms. Now, talking about the VC exit routes in 2025, in terms of acquisitions, there were 136 deals for VC exits, up 7% year on year. We also had listings, 42 startup listings as exits for the VCs, up 17% year on year. And significant startups listed in 2025. Some of them include Lenskart, Grow. We also have Misho, Pine Labs, Ether Energy, as well as Urban Company. Now, the Urban Company was a star startup listing, right? It listed at a 56% premium. We also have Wakefit, eKiss, and Capillary Technologies amongst other startups that listed this year. And looking forward, now in 2026, we can expect a big household name such as PhonePe listing. They might raise up to 10,700 to 13,400 crores. We also have Zepto. It might raise 11,700 crores amongst other companies such as Incred, Captain Fresh, Inframarket, right? And we also, so that's some of all the IPOs this year in terms of startups, and looking ahead to a good, robust year in 2026 as well. Back to you.
All right, thanks, Ishika, for that update. Lots of startup IPOs coming up in 2026 as well for you. But with that, time now for a very quick break. We'll be right back with more. Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanushka Sarkar. And it's the last day of the month. And from tomorrow, auto numbers are going to trickle in. So yes, all eyes are going to be on December auto sales data. And passenger vehicles, they are expected to stay strong, helped by year-on-year discounts. Tractors, they could surprise with resilient volumes despite seasonality. Srishti is here to take us through what to expect.
Well, yes, the year 2025 has been an amazing one for the auto sector indeed, and seems like the December 1 is going to be another strong month for the auto sector in terms of the sales data. All across the board, we should be in to see a double-digit growth, but the most of the gains in percentage terms on a YOY basis are expected to be led by the passenger vehicle and the two-wheeler segment. But yes, the tractors and commercial vehicle segment are expected to be left no behind. In terms of the key factors, is the passenger vehicle companies offering the most of the discounts right now in order to get rid of their year-end inventory, and most of the discounts, interestingly, were actually in the EV space. The commercial vehicle demand is seen to be improving, especially for smaller trucks and trippers, and most of the analysts do believe that the outlook is going to be raised further. Now, the two-wheeler segment, once again, a robust growth is what we are seeing, and even the tractor sales are expected to surprise us this time around as well. Let's talk numbers then, and firstly, with respect to the passenger vehicle space, herein we get to see that in terms of the percentage growth, it's going to be M&M Automotive Division as well as Maruti Suzuki, wherein the growth is expected to be upwards of 20% on a YY basis, while for Tata Motors PV, 17% growth, while for Hyundai, 12% growth is what we are expecting. Though yes, of course, on a month-on-month basis, they expect it to be a decline because yes, some consumers do prefer to get benefit of the higher discounts. But yes, it's this particular year is going to be on their cards, and some do prefer that if you're buying a car, why not have the year and the labeling of the next year. Now let's come to the commercial vehicle space. Here in terms of the percentage growth, it's Eicher Motors VECV that's expected to show the most strong growth right now. 29% growth is what we are expecting, while for Tata Motors CV, a growth of 16%, and similar growth for Ashok Leyland is what we are penciling in. And now let's talk about the two-wheeler space here too. Despite that this particular month is not expected to be that great for the two-wheeler counters, but yet the companies are expected to show a very strong growth this time around. Let's start with TVS Motors and Hero MotoCorp. A 27% jump is what we are penciling in. Eicher Motors Royal Enfield expected to post a number close to 1 lakh of unit in the month gone by. And lastly, with respect to Bajaj Auto as well, close to 4 lakhs units of sale is what we are expecting. And lastly, from the tractor division, with respect to Escorts as well as M&M tractors, a 14 to 18% growth is what we are penciling in, though a 39 to 41% decline in their month-on-month sales data is what we can see, but that could be led by the seasonality. So all across the board, let's get in to see a double-digit growth. Back to you.
Likely going to be a double-digit growth across the board. That's the word coming in. But now, January trends, they remain mixed across broader markets. Shifting focus back to the markets here. Nifty's 10-year January average return is modest, with gains seen only 3 times in the last decade. Mid-caps and small caps, they've usually fared better historically. Ashesha is here to take us through all of the historical trends. Ashesha, over to you.
Well, yes, January is usually a soft month for Indian equity markets. So we try to decode and analyze what kind of returns have indices given in the month of January historically. First up for Nifty, it has given an average return of just 0.4% and it has ended in the green just 3 out of the last 10 times. Shifting focus to the broader markets then, and small cap and mid cap index performance has also been rather muted in the month of September, with mid cap giving an average return of 0.5%, small cap at about 0.4%, and they have ended in the green only 5 out of the last 10 times. So clearly January is a soft month not only for Nifty but for other broader market indices as well. Let's also talk about individual sectors and the kind of performance we have seen for individual sectors. Nifty Realty Index is at the top of that list, which has given a solid return of 2.5%. This is the average return for the month of January over the last 10 years. This is followed by Nifty IT Index, which has given a return of 2%, Nifty Auto, Nifty Energy and Nifty Bank Index, which has given positive returns anywhere between 0.3% to 1.5%. So these 5 sectors clearly have reported solid performance over the last 10 years. This, of course, is the average return. On the negative side, though, we have Nifty Metal Index, which has given an average negative return of 2.3%. Pharma, PSU banking stocks and FMCG have also given on an average negative returns in the month of January. So that's how the sectoral performance looks like. Let's also put the spotlight on some sectors which have ended in the green 7 out of the last 10 times. It includes Nifty Auto and Nifty IT. So these are the 2 sectors which have higher probability of ending in the green as compared to other sectors. But yes, overall, January turns out to be a softer month for Indian equity markets.
All right, thanks Ashesha for that update. So usually January turns out to be a softer month for Indian markets. Let's watch out whether or not it happens to be true this time around as well. But moving on, there's a big relief coming in for domestic steel makers. The government has imposed a safeguard duty on select steel imports for about 3 years, that's starting at 12% in year 1 and tapering thereafter. Now this levy applies to imports from China, Vietnam and Nepal. Prakash is here with the details. Let's take a look.
Well, that's an important development coming in for the domestic steel manufacturers and a big relief amid increasing dumping in the country from China, Vietnam and countries like Nepal. We have seen that the DGTR had recommended government to impose safeguard duty for at least 3 years. Now, Ministry of Finance has accepted the recommendation of DGTR and has issued notification saying that the safeguard duty will be imposed on imports from China, Nepal and the countries like Vietnam, and that will be in a staggered manner. That will be at the rate of 12% in the first year, 11.5% in the second year, and 11% in the third year. So it's a very significant development coming in. Remember, the government had earlier imposed provisional safeguard duty of 12% for initial 200 days, which was lapsed in November this year. And after that, it was under consideration from the government side. After taking all these factors into account and the recommendation by DGTR, Ministry of Finance has now decided to impose safeguard duty for another 3 years. So, of course, that will provide much needed relief to the domestic manufacturers from dumping in the country. Back to you.
All right, thank you so much, Prakash, for getting us all those details. So that's a big relief for the steel makers after the lapse of this import duty back in November. Once again, a 3-year import duty has been there, and definitely a positive news flow when it comes to stocks like Tata Steel, SAIL, as well as JSW Steel will be in focus today. But with this, let's move on and let's shift focus to the primary market then. And India's IPO market stayed busy in 2025 with 103 main board listings and 270 SME issues, raising a combined 5.4 lakh crores over the past 5 years. While marquee issues like Tata Capital saw muted listing gains, strong performers, names like LG Electronics and Meesho kept investors' interest alive. How did 2025 look like and what's in the store for 2026? Will the IPO rush sustain? Let me take it across to Ishika, who is here with the lineup.
Definitely. So this year was a very robust year for IPOs in the primary markets in particular. Now, yes, there were over 103 main board IPOs, and some of the most prominent IPOs included Tata Capital, the largest issue, right? 15,500 crores of fundraise, and it, however, it listed at a discount of rupees 1%, a muted listing. We also have Grow and Pine Labs, some newer names in the lot, followed by Lenskart, and we also have well-established companies such as ICICI Prudential AMC listing this year at a premium of 20%. Now, talking about some of the strongest performers since their IPOs this year, we have Aditya Infotech, Stallion India Fluorochemicals, Ether Energy, Misho, as well as Jain Resource Recycling Limited, right? And now talking about the losers this year post IPOs, we have companies such as Glottis Limited, Gem Aromatics, BMW Ventures, as well as Aris Infra Solutions Limited. Now, they are down 30 to 50% post IPO listing, as you can see. So right here on the screen, we have VMS TMT down 51%, Gem Aromatics down 49%, Aris Infra down 37%, right? So these are some of the losers since IPO listing. And talking about next year, 2026, we have some good names coming to the primary markets to collect. Names such as Hero FinCorp, they're expected to raise over 1,200 crores. We also have Hero Motors, they are expected to raise over 2,100 crores, and other good well-known names such as Kent RO, Oyo, Boat, Snapdeal, Fab India as well, and Zepto, PhonePe. So I think it would be a good year for IPOs next year as well, and we are expected to raise funds over 3.5 to 4 lakh crore through primary markets in 2026.
All right, so that IPO rush is likely going to continue in 2026 as well. But with that, we're completely timed out on this edition of Market Cafe. Srishti and I will take your leave, but don't go anywhere. The market is coming up next. And lastly, wishing all our viewers a very happy and prosperous new year from here on.